Ollie Beckett, you invest in smaller European companies. What characterizes a company you would invest in?
It tends to be companies under a market capitalization of 4 billion. And ultimately, we're just looking for companies where we think they're undervalued. And maybe the stock market's perception is slightly wrong.
You are picking European stocks bottom up mostly. How do you keep track with so many companies out there?
I have to do a reasonable amount of work, but other than that, look, we'll run a number of screens to try and sort of narrow the universe down, because it is a vast universe, as you say. Other than that, it is just keep reading, keep picking up on things, keep talking to people, just put the hours in, put the work in.
Do you often try to take influence on the managers from the companies?
I think it might be overstating to say they really listen to us, but these guys are experts in their field, so I don't want to lecture them. But there's things we're looking for in investments, quite frankly, if I don't think they're going to go down the route that we want, and they're not going to be shareholder friendly, then we just won't invest. There's a number of other companies out there, so we're not activist. We will give some views, give our encouragement, but I'm not really lecturing companies.
We saw a pretty strong euro over the past few months. What is the impact on your portfolio if the euro gets stronger again?
Look, my portfolio will probably benefit if the euro gets even stronger, but I think the risk is, does maybe the sterling rally, does the dollar rally versus the euro, and we have to be aware of that. But look, the European economy is improving, but maybe, for example, the UK economy isn't quite as terrible as some people think.
More or less 20% of your assets are invested in Great Britain. What would be a post-Brexit scenario? How would it affect your portfolio?
Look, we're significantly underweight the UK, but there are still a number of interesting investment opportunities we can find in the UK. There's a number of really good companies, Brexit or no Brexit. And as I say, maybe actually the UK isn't as bad as people fear, but maybe the impacts of Brexit come much later. When do companies decide to move out of the UK if there's no deal? There's a lot of uncertainty, and uncertainty isn't good for investment, but we can still find great ideas in the UK.
But you would also go far away from the benchmark than you are now, if it would be a negative effect.
Yeah, sure. If I think the UK is going to go into a heavy recession, I'm happily take even more underweight the UK. I don't envisage it, short term at least. We'll see how things go, and as I say, there are always a number of companies that will do okay, whatever the environment.
You're also invested in Switzerland. Meyer Burger, for example, is one of your positions. What are the arguments for this company?
It's not going to go bankrupt, and a lot of people thought it would. They did the rights issue. We've got a new CEO in, and they're winning orders. They have good order momentum, particularly out of China, and maybe they can start to win orders in other parts of the Western world. They have a technology that helps solar companies be more efficient and bring costs down. That is what they need, and so they're in a good place. They've come through a lot of troubled times, but I think Meyer Burger is an interesting investment.
Are there other Swiss companies you're interested in?
Sure. I mean, a long-standing holding is Oerlikon, which we've had for a number of years now. And again, that's been through some heavy restructuring, disposals, acquisitions, and increasingly focusing on coatings and surface solutions business, which ultimately is a very good position, and they've got a sort of global leading position. So again, it was trying to find that undervalued company where maybe people didn't want to look, and we've made some healthy returns from it, and I think we will continue to make some healthy returns.
One of your other top picks?
At the moment, our largest holding is a Dutch bank, Van Lanschot, which is moving towards being a wealth manager from being a retail bank. We've done very well, I guess, out of Burford Capital in the UK, which I think is in a structural growth area of litigation finance. Sadly but true, it's an expanding area of the world. But we've got lots of different things. We have Vapiano, the German restaurant group, sort of doing Italian food, which again is rolling out and doing increasingly well. And even things like the gym group in the UK, doing low-cost gyms. So, we've got a number of interesting ideas. There's no shortage of those. And, we're reasonably confident as we go forward.
If you look forward, what are the risks for European companies in general? For example, we have 1 year ahead. There could be a change in presidency in the European Central Bank. For example, if Mr. Weidmann gets president, would this change the environment?
Sure. I mean, look, I don't know. I mean, we're coming towards the end of quantitative easing, that's for sure. Whether we have severe tapering, I don't know, and interest rates going up, but we're coming to the end of that whole QE experiment. And we look at the other things you didn't mention, but maybe we've got the Italian elections as well. There will always be political uncertainty. We've got a dozen or so countries, so that's not going to go away. There will always be political noise. But at the moment, the European economy is getting better. It's growing. So my bigger worries are probably coming from the US or China. Do they slow down? At the moment, I don't think so. But if they do, there's no way Europe can avoid slowing down also. But at the moment, all things look good.
Ollie Beckett, thank you very much.
Thank you.